All right, guys, this is Paul Singh, the Market Speculator, bullsonwallstreet.com, pauljsingh.com, with the third episode of Ask Paul Anything. And I got most of these questions here from Twitter. Let's take a look here. Some fantastic questions this week. I don't know if I'm going to get through all of them, so I might split this into two here. And then if you've got any questions, you can ask me in the chat here. Either I'll get to them today or I'll get to them next time. But let's take a look at some of these questions here. Number one was from Steve in a non-trading question here. I did say ask me anything. And he asked what I had for breakfast. Interesting question. It's Sunday today. Every Sunday I have a big breakfast. I try to eat really healthy during the week. So Monday, Wednesday, Tuesday, Wednesday, Friday when I'm trading, I do the oatmeal thing. I'll have a cup of coffee, some orange juice, and that's basically it. A little protein, and that's it. But Sundays we go to town. Chocolate chip pancakes, sausage, bacon, eggs, the works. So that was my breakfast today. I am going to work it off later today after football's over. I'm going to do some jiu-jitsu. You can see I'm ready here. I've got my Bruce Lee shirt on, an idol of mine here. So hopefully I won't add on any pounds with that big breakfast here. Number two, why do you live on the West Coast? That's pretty easy. I was born here. I did move to Minnesota for 15 years. When we were looking to move from Minnesota, once we had the lifestyle we wanted, my wife works from home, I can work wherever I want. We were looking at a few different places and we decided to come back towards our family. All right, now let's get to the trading question. Number three, this was from Tony and Layla. LABU is pulling back. What do you think? So let me get on the screen share here, and we've got the chart for LABU up here. And if you see the chart here, and let's actually switch over to IBB. When I'm analyzing the sector, even though I'm going to trade LABU, I'll take a look at the underlying index. And actually, the underlying for LABU, and some mistakes some people make, is XBI, not IBB. But I always start with IBB anyway. It's the bigger stocks, more like the S&P 500. And we've been talking about this post-election. Nice breakout. Consolidating now. Now we took this trade, and if I pull it back to LABU, and actually let's go to XBI here. So, and you can see XBI has moved a little more because it's more of the high flyers, more of the mid caps versus the bigger biotech type stocks and the big pharma. So you can see here we had a fantastic move here. We actually timed this pretty good. Entered on the day of the break. Entered right at the top of the range here. Those of you who are Trade Report members know this. You got the alerts. Now it has pulled back. We were talking about this in the report that we're looking for a re-entry now. And we're pretty much there. I could have taken it on Friday if I wanted to. I wanted to hold off and wait for the weekend, see how the market is opening Monday. Maybe I get a little better value. But LABU is at 44. I would say entering anywhere in here from 42 to 44 is a pretty good spot, or 44.50. And what I'm going to do now this time, we've already tested 50 once. I'm going to play for the break. So let's say we enter at 44. I'm not going to get out at 50. Maybe I take a partial, but I'm going to be playing for a move to about 55. So we want to get a good 10 points out of this. And as a swing trader, this is what you want to do. You want to be able to assess what the market is doing and how that impacts your trading. So I'm not always jumping in at or using the same style for my exits. And we're going to talk about exits in a second here. We've got some other questions related to exits. But because of what's going on in the market here, I know I can be more aggressive with the target on biotech. Whereas, a month ago, if I was trading this when we didn't have the catalyst, we had to worry about Hillary, I would have taken that profit at 50. But now I'm going to look for the bigger move. All right, great question. Now I got a question. This question came from two people, and they're probably following me because I've been talking a lot about this. Harry Dandewall and Jamie Norton on Twitter asked your thoughts on IWM moving higher relative to SPY. And that's what we're always watching. We're not just looking at SPY. We're not just looking at what we call the market. I always relate it to IWM. And the reason for this is SPY is really the bigger, higher float stocks that most of them were not even trading. As aggressive momentum traders, we want to capture big moves in a short period of time, big momentum trades, and those tend to happen from the mid to lower float type stocks. So, IWM is weighted in the heavier stocks, or sorry, SPY is weighted in the heavier stocks. What we want to see here is IWM leading, or at least keeping pace with SPY. Whenever it's lagging, I'm concerned. As a swing trader, I want to see IWM doing really well. Then the type of stocks I'm doing that I want to trade will do better. Now, if that's not the case, I'll slow down and I'll trade some of the bigger SPY stocks. I might trade the SPY index. I might trade Apple, Google, Amazon, Netflix, those types of stocks. Otherwise, I want to be keyed in on the float, mid to low float. Sometimes you haven't even heard of these stocks, but they're leading the market. And right now, IWM is leading the market, and because of that, I like it. And I think one of you guys had a question. Now that it's pulling back a bit, are you looking to enter? And the question is yes. Specifically, from the 5 or 6 areas we mentioned in the trade report, we've got biotech, we've got commodities, we've got defense, and a few other sectors here, marijuana stocks. They've all pulled back, not all of them, but a lot of them have pulled back in a little bit. And now we're going to look for good entries because the market still looks very healthy, even if it does pull back some. All right. Grant L asked, what are your favorite indicators? In the beginning, first of all, I've tried every indicator under the sun. Over 20 years of trading, I've tested just about everything. There are definitely strategies for just about every different indicator that can work. For me now, I basically look at price action and volume, and that's it. I don't need indicators. The more experienced you get, the more you want to be peeling back what you're using in indicators. So my charts, and you guys have all seen my charts here, basically have a few moving averages, different time frame moving average. So I use the 9 EMA, which really corresponds with the 5 simple moving average. And then I use the 50 and the 200, basically an intermediate and a longer term. And that's it. And then I have stochastics thrown on basically as a guide for overbought, oversold levels, and sometimes divergences. And that's it. No other indicators. Now, if I'm starting out and I need something, I would use stochastics for overbought, oversold. I would use RSI if you need it for divergences, because stochastics are a little more difficult to track for negative and positive divergences. That is, divergences compared to the last low or high, how is the rate of change compared to the last one? So you can throw one of those on. You could use Bollinger Bands, which is essentially tracking the same thing. And if you need a volume indicator, you can use OBV. I used to get a lot of mixed signals in OBV, so I would really recommend in your volume analysis really watching the volume and understanding what is going on in the volume. And for me, that's it. I know that there's MACD, there's a ton of other different indicators you can be using. Remember, they're all basically tracking the same stuff. So you don't need to throw on 50 different indicators, which I have done in the beginning, and it didn't work out for me. All right. Trader1235 asked, largest one-day win and loss ever as a percentage gain. And both of these came within days of each other back in the 90s internet. Boom. Those of you guys who've read my story, go, and if you haven't, go into pauljsingh.com. Under my story there, I talk about it. I've blown up 2 accounts and also on the Chat with Traders interview, we talked about this also. So I'm not going to rehash the whole thing. But basically, in the late 90s internet boom, when I first started, I didn't know anything. I was in law school. Ran $5,000 up to $200,000 literally in a matter of a couple of months here. And I had some huge wins. And on the way down, I blew up that account. I had some huge losses. And in one day, or it may have been a couple of days, I had a $50,000 win and a $50,000 loss. So those were extreme moves that in my active trading, I've never matched again. This was way back when. But those were the biggest days and losses. And really, you don't want to key in on that. Those are usually, your biggest win days are usually going to be the days where you probably risked a little too much, and same goes with your losses. And now I don't even really pay attention. I feel like I've gotten a Zen place where I don't even pay attention to my P&L for the day or per trade until I go back and actually analyze what I've been doing. Because if you're watching your P&L and paying attention to this type of stuff, it's going to affect the way you're trading, and you never want your results to affect the trade or the setup that you're looking at. All right, I got a number of questions about exit strategy this week. This one was from Billy Morocco here. When do you exit a winning trade? And personally, I think this is the most difficult part of trading. Once you've got the mental game down, and you know how to manage your risk, and you don't let your emotions get the best of you, it's the exit strategy. What I always talk about trading is three things. It's the setups, it's the knowledge base, then it's the risk management, and then it's the trade management. And the first two people can work through and get very easily if you work at it. The most difficult thing, the area where you're really going to be putting in most of your time, is the trade management aspects of trading, and an exit strategy is a part of that. For me, the most difficult part of trading. What I do, and I alluded to this earlier with the LABU potential trade, we're looking at a lot of different factors, so I can't say this is what you do on every exit. I get the question all the time, do you use a trailing stop, percentage trailing stop? I never do that. I'm analyzing the market, I'm analyzing the sector, I'm analyzing the stock, I'm looking at the price action and basing my decisions off that. So what I normally do with most trades is I like to take partials. So wherever I set my target, maybe there's a resistance level, I'll take a partial 50% off and then trail the stop after that. Now it gets more complicated, more than I can get to here, but you want to be working on these trailing stops. Otherwise, you're always limiting yourself. We know these resistance levels here, they're not hard lines that the price action cannot get through, and oftentimes they do break through these. And if you're continually getting out before these breakouts, you're never going to hit these big wins. So the partial gives you best of the both worlds. You can play that resistance level, get your profit, and then you can trail after that and get the big win. All right, Nicholas Gang, or Jang here, has a question. When you position size, do you use your account equity or risk? I never pay attention to my account size or how much of my account I'm position sizing with. I base everything on risk. So let's say you have a $100,000 account and you want to trade a big stock like Google. You're probably only going to get one, maybe on your account you can only take one or two positions now because you're trading Google. And that's fine, but it's not a big position to me. I'm focused on the risk. So the way I'm assessing it is, let's say you have a $100,000 account, you'll risk 1% of your account per trade. I'm willing to risk $1,000 on this trade. And that means if I set my stop at, if I'm buying something at 100, I'm going to get 100 shares. If I set my stop at 90, then I've got my $1,000 that I would be risking. That's where I would get out. If I had 50 shares, I could use a 20-point stop. So I'm always looking at that risk, not the amount, the amount of my account I'm using. So you could be trading Google and you're using all 100,000, or maybe you're even on margin. And that is actually a riskier trade than, say, the smaller stock that is only taking up $10,000. It's only a $10,000 position, but maybe you're risking $2,000 on that trade. So that is actually, in my mind, a bigger position than the actual bigger position is. So that's the way, that's kind of the framework I look at everything. The only time I take my account size into account, and I don't have to do that anymore since it's a bigger account, but when I was trading smaller accounts, I would think to myself, you know what, maybe there are 5 or 6 sectors I want to be in, so I've got to take smaller position sizes so I can be in all of these sectors. But other than that, it really doesn't matter. All right. Peter Shudra has a question here. How do you prioritize your trades? Which do you take and which do you pass on? You know, I'm going to save this question for the next one because it's going to take a lot of time, and this could be an entire lesson on this type of stuff, and it really brings a lot of things into this. So Peter, I'm going to answer this and maybe just one other question, ask me anything, number 4. So I'm going to skip that one for now. And our final question here, Karma Trader. How do you deal with losing streaks? Now, I know a lot of you guys who follow me or in the trade report or the weekend free reports or on Twitter, wherever it is, I sound like a robot, whether up big, down big, whatever the market's doing. I sound the same every day. So you think I don't have these emotions, but actually, especially in the beginning, I'm a really emotional trader, and you can never get rid of these emotions, but it's how you react. I've kind of taught myself to react a certain way. Specifically for losing streaks, it's a matter of outlook. If you're thinking about things per trade, which most traders are doing, they're living and dying with each of these trades, then a losing streak is really going to get to you. But if your mental outlook, if the framework you're looking at everything is longer term, I'm thinking of things, I'm thinking of not one trade, I'm thinking of how this setup works for the next 50 trades. Thinking if I'm trading breakouts, I don't worry about how I traded that one breakout. I'm thinking of it, I may lose on this breakout, but I know this is a good setup, and after 50 trades, then we're going to see the results. So I don't think of it trade per trade per trade. I'm thinking of a bigger kind of picture here. Now, obviously, if you have a losing streak, one thing I do with every losing streak I have is I go through, like say I've had 20 trades, and out of the 20 trades, I lost on 15 of them. And that can easily happen to the best trader because we're basically playing probabilities here. I go through that and grade every single trade, A, B, C, D, E, or F. And if they're all A's and B's, I'm not too worried. Now, if I go into that losing streak and I say to myself, and I'm not focusing on results, it's the setup, the process. How did I trade it? Was it a good setup? Did I exit well? All this kind of stuff. So if I look at that trade and I don't think it was a good trade and I'm giving myself a C or a D or an F, and I've got a bunch of those, then I can look at that losing streak and then I might get upset at myself that, hey, I did not trade this well. This wasn't probabilities. It was actually me. So you have to be able to assess that during a losing streak and then make an adjustment accordingly. All right, guys, that's it for Ask Paul Anything number 3. Great questions here. I've got a couple that I'm going to answer in Ask Paul Anything number 4. And remember, guys, subscribe to the YouTube page here. Bulls on Wall Street, you can catch me there. I revamped my site, pauljsingh.com. So I'll see you guys next week.